What's up YouTube, it's Louis here, I hope you're all well. Today we'll be looking at Bitcoin on the daily time frame. If you're new to the channel, please subscribe as we're trying to get to 4K as soon as possible. We're almost at 3.5. Let's push for that by the end of this month. Let's get to 3.5K subscribers. If you enjoyed this video, please leave a comment down below, and if you found value, let me know what you found value in. So I'm going to talk about the bearish scenario first. We haven't validated it. At one point we had done before I went on holiday. I told you guys about this scenario here where we had this double bottom, this larger one over here, but we weren't down here before I went on holiday. We were all the way up here, and I said for the bearish scenario, the bearish scenario would be closing back under this and then losing this neckline, because here you had an M pattern, and I said once you close below this, we're going to head back down to here, forming a much larger M pattern just like that. And we have come to the neckline. We did actually close below it, validating the technical target all the way down to 18.5K. That's the target. If we close below 21.2K, that is your target, 18.5K. And you can see here we close under. So that means we validated that target. But unfortunately, because we still closed above the wick here, although the M pattern validated here, you never close below this low. And so that over there is a higher low. It's technically still an uptrend. Yes, if we're going back to this point here, this here is a lower low. That's negative. That's basically saying that we're going to try and keep going lower and lower and lower, because even if we do pump up now, it's going to be lower than this, so potentially get a lower high. That's why we need to see us get back above these EMAs, flip them into support, giving us higher probability chances of attacking this high, trying to break above it. If we can actually reclaim these EMAs, it's going to give us a higher probability chance to attack this and break higher than that. Now, that might not happen at all. We might just fall from here. And there's potential for a bear flag over here, which is a bearish continuation pattern. And yeah, the target is going to be equal to this, maybe a bit shorter. So I'm going to measure it from here to here. You can see on the breakdown, if I put it on the breakdown, wherever it breaks down, you can see we're going to come into the 786. So I'm not too worried about that target. I just noticed this green area that's going to be tested anywhere from the obviously this line as from the M pattern all the way down to 18.5K, but anywhere between 18.5 and 19K. Again, if you've been watching these videos, or if you haven't been watching, the level that we on this channel are watching out for, and we've been saying for a very long time, since the bottom, since actually June, the end of June, we've been saying 18.6K is the low that you want to hold. As long as you're above this, we're bullish, because we should have never got above this. Can you see how my fib is from the low to the high? I've measured this massive impulse all the way until there, and we're retracing back into this golden pocket. So as long as you're above this golden pocket, then yes, you are bullish. What is also bullish is the fact that you're above this low. So you got that higher low there. And what we're doing now is reclaiming this previous M, or this M pattern's neckline, and trying to confirm it as support. And as you can see, if we zoom in a little bit over here, you can see this is the green line, 21.2K, and we came back above it and held it support once, twice, and now third day in a row. This is not confirmed yet, but we have 2 confirmed days of holding it as support. Here you broke above it, amazing, but now you need to confirm it. So we need to hold it as support to confirm this is the bottom, like in this area. Basically, that support basically means the lowest point in the area in the market, lowest point in the market. So if we're looking in terms of just this area, then this over here is support. We do not want to close below that, because if we close below it, then it's not support, and if it's not support, then it's most likely going to be resistance, and that's how we fall through it. But if you're holding above this wick and you're reclaiming that green line, which you can see we held above the wick here, and we're reclaiming the green line, we just need to continuously hold it as we have done for 2 consecutive days. Let's do it for a third. It's going to give us higher probability chances to try and come up back to the 20 and the 55, because we got overextended. Can you see when we came down here, where was the 20 EMA? The 20 EMA was over here. So we're trying to form some sort of pattern to get back to the 20. Then we need to see, because now we're under the 20. That is actually very negative. We never formed a bullish cross, which I spoke about. The alts did, Bitcoin didn't. That mean all the alts bullish cross could potentially be fake. So we need to really watch this going forward. We need to hold the lows. What's the low? 18.6K. And again, guys, as long as we're above 18.6K, we're okay. And again, talking about this golden pocket, as long as we're above it, we're bullish. I'm going to get rid of this. And remember, that fib was measuring this impulse to see where are we going to drop to. So this is why I draw the gold box between the 050 and the 0618. This is where we drop towards. We drop towards it. As long as we hold it, we continue and make a high basically. We're going to show you some fibs the reverse way, using them as a reversal tool, measuring from this wick over here to the bottom, basically saying that I realized this was the bottom. You start coming up and you draw your golden pocket, because what I just explained is we over here, you measure the push to find where is it retracing to, which is the golden pocket, before continuation like that. So that's how the fibs should be used, but now I'm going to use them in a different way. So as they should be used, this is the impulse, this is the retracement back into the golden pocket, and what should happen is continuation downwards and lose this. That's exactly what's meant to happen with the fibs. Just like that, I've just drawn it here. Push, exhaust, continue. Push, exhaust into the golden pocket, continue. So it did it the reverse way over here first, and you exhausted into the golden pocket. You got above it on 2 occasions, once and twice, but you closed back under, which is very bearish, telling us we're going to break this low. And we failed to break that low, so we made that higher low. This is where things started to change, where the bulls actually stepped in right here. Right here is where you should have gone lower than this low. Did you? No, you put that higher low. So now we need to go higher than this, and we need to actually break above this golden pocket and go higher than the candles to our left. We did that with the wick and with the body, just a slight close above that body, but still a higher high nonetheless. So all you need to do now is continuously hold this, and you actually, with this wick, went higher than this wick. Can you see? This is a low, this is a higher low, this is a higher low. Each low is higher than the last. So that's how I know this is an uptrend. But again, you still haven't technically created the reverse wave, because you came back under here, you came back under here, you came down, but you just weren't making the lower lows. And remember, the fibs are push, exhaust, continue. We need to pretend that we never had these two movements. So without those two movements, just imagine that this was the push down, this was the retracement back into it, and from here you're meant to continue down like this. But did we do that? No, we actually managed to eventually climb above it, hold it as support, hit this resistance, make a higher high, higher than that high, the 1 fib level, come back to test this as support now, the reverse wave. We created the reverse wave, because again, this is what should happen. Push, exhaust, continue. But you found support here, went up, created the reverse wave by holding support right there. You flip this previous resistance into support. So by holding above it right now, there's nothing to be bearish about. Do you guys understand that? Where previously it kept on rejecting you, rejecting you, rejecting you. Then it failed to work, and now it's rejecting you the opposite way, this way. So that's why we should expect a rejection that way. So this should act as support, sending us back to resistance basically. So if you enjoyed that, found value, and want to learn more about this, head over to my Twitter, Louis_crypto. But again, if you just enjoyed the content, then yeah, please leave a like, subscribe, as we're trying to hit 4K as soon as possible.